Good day. Welcome back to part 2 of our discussion on Introduction to Accounting. So if you are new to this channel and if you haven't watched the part 1 of this section, the link is in the description section of this video. Make sure that right after this you watch the part 1 so that you can get the full context of the story on accounting that you're trying to build, so that it can help you to get a fundamental basis when it comes to accounting. So today we want to continue the discussion by looking out for the objective of the financial statement and the needs of users of the accounting information, or the needs of the users of what the financial statement. We'll take it from there to look out for other issues going forward. So we said in our previous video that when it comes to the objective of the financial statement, the objective of the financial statement to provide an information about the financial position, performance, and the cash flow of the entity to a wide range of users, right? In order to help them to make sound economic decision. That's what we said in our previous video, or in the previous lesson. We said that the objective of the financial statement is to present the financial information, the performance, the position, and the cash flow of the entity in order to help users of accounting information to make sound economic decisions. So if the objective of us to present the financial statement to users of the account information, then we need to ask ourselves this question: what are the needs of these users in this financial statement or in this accounting information that is so interested that they are the focus of we preparing or these financial statements? What are the needs of these users of this accounting information? So that will lead us for us to discuss the users of the accounting information. And as per the conceptual framework of accounting, we'll look at them as the next section, the next topic we're going to discuss, conceptual framework. As per the conceptual framework, we have 7 users of the accounting information or the financial statement, and whose needs are being captured when it comes to the financial statement. And they need the financial statement or the accounting information in order to make sound economic decision. So what are these 7 categories of user that we are talking about? So we can have it here. We can have a boss here. This boss represents the entity or the business. So we may have these 7 people coming to town. This is how it goes there. We may have, so this is 4, 5. Let's say we have here 6. Let me present the 7 somewhere here. So here we have, let's say we have investors. So here investors here, we mean actual and potential and actual investors. Okay, you may have investors here. You may have government here. Government. You may have government here. You may also have what we call lenders. Lenders here. You may also have what we call management or managers. The lenders here, we can bring in creditors. Can bring creditors, or like say we can bring in lenders or creditors, or we can bring in suppliers. Have lenders, creditors, or suppliers. Okay. We may also have employees. We may also have we have government, employees, investors, management, lenders. Or we may also have what again? Let's see what I have here. We may have the general public. The general public. We also have them captured here. And then what else? We have customers. Yes, customers. So generally, these are the 7 groups of users that's being captured in the conceptual framework of the accounting information, whose needs are what the business presents in the financial statement. So we want to know the needs of these individual users of this accounting, because we have already captured that these users need the accounting information or the financial statement in order to make sound economic decisions. So let's begin with the investors. So when it comes to these users, we have primary users and we have secondary users. When it comes to investors investor is one of the key primary user of what? The accounting information. And solely I can tell you basically, or in 100%, I can tell you that the goal of you preparing the accounting information is to meet what? I mean, it's for us to what? Get one investors. So all these people can be an investor. Lenders can be an investor in a short in a way. Or lenders or creditors or suppliers. When we get there, you will get to know that they actually supply goods or service to the entity within a short-term period, and that can be a short-term investment, right? So investors are key when it comes to creation of the financial statement, and then they are the primary users of the accounting information. So when you ask what are the primary users of the accounting information, investor or investors are part of the primary use of accounting information. So what are the information needs of investors? One, investors need the accounting information in order to account for what we call management stewardship. Management stewardship. Stewardship. Management stewardship. What is management stewardship when it comes to what investors need? So management stewardship has to do with why investors want to find out from the financial statement how well their investment or their money or their resources being used in the business. We want to know from the management whether they are using it well or they are not using it well. I mean, efficiently and effectively, or they are not using it well. This is what we call management or stewardship. We want to know whether the investors' money or resource is being safeguarded in the right hands, right, or it's being protected so well so that it turns out that it yield a profit for them to earn. So management stewardship is one of the key things that investors need from the financial information, and also has to do with they need the financial information to know whether the business can pay them, I mean, their dividend. The dividend here is called profit. When they made profits, how can they pay these investors? They also need those they also need those information from the financial statement. Another thing has to do with whether they can decide whether they should hold their money or their investment or their resources in the business, whether they should sell it or be part of the business. So these are the things that investors need when it comes to the accounting information. So management stewardship, whether they should hold their investment, sell it, or buy, whether they should hold it, sell it, or buy, or whether the business can pay them dividends as and when it's due. So these are the things that investors look out for when it comes to the financial statement or the accounting information. Back to government. Government is also an external user. Government is an external user of accounting information. Government need the financial information in order to assess tax systems, in order to assess tax. So one, taxation. Taxation is key when it comes to what government needs. Two, in order to regulate the business. Regulation. Whether they are doing proper business within the country or not, on the location they find themselves. So taxation, regulation purposes, and compliance. So compliance to what? Rules and what? Laws. More link up to the regulation. So government need accounting information to know whether they are true with all these things that is required of them. Because at the end of the day, if you're a company, if you're a business, when you make profit, you expect to pay tax on what? Profit, called taxation. So we need to regulate that to see whether you pay that tax or not. Compliance what? Rules and regulation governing the country and how you operate, so that your business don't turn out to affect the lives of people. These are the things that government will look out for when it comes to your financial statements. And as well, they need also the financial statement in order to help them to generate the country or the business statistics over a period of time. So these are the things I also need when it comes to government. So statistics here and there that is supposed to know. So that is for government. What about lenders, creditors, or suppliers? When it comes to lenders, we may have banks, okay, we may have You may have banks and other institutions coming up, or creditors or suppliers. Or they are also called external user of the accounting information. But their service or resource they provide, they are in a form of what? A short term. They provide a short term investment to the entity, right? So they need the accounting information to assess whether the business can pay a debt as and when was due. So debt payment is key. Debt payment as and when it is due, how they can pay a debt as and when it's due. They also need the accounting information to determine the survival rate, the survival rate of what the business, whether the business will stay in the business for a longer period of time or not, so that they won't run with their money. Because they also need money to run their businesses. Banks, creditors, or suppliers, they supply goods and services to the entity. They need to know the survival rate of the entity. Through the financials, they will get to know the survival rate of the entity. And also to know whether the business can pay them their debts that they have given out. For example, banks. When the business go for loan from banks, the bank needs to be aware whether they can pay their debt as and when it's due, and even any other interest that comes out of it. So interest payment as well is also key. Interest what? Payment is also key. And these are the things that lenders, creditors, or suppliers will also look out for when it comes to the accounting information. Then management. What are management take when it comes to the accounting information? Management are those that are responsible for the day-to-day running of what? The entity. They are responsible for the day-to-day running of the entity. They need accounting information in order to know whether the business is doing well or not. So they need the accounting information to determine the profitability, okay, of the firm. They also need accounting information to determine what? The survival rate, whether the business can survive for quite long or not. They also need accounting information in order to protect the interest of their investors so that, they can safeguard. That's where management stewardship comes in. And that is what also investors also look out for. Whether their resource is being safeguarded well, whether it's being utilized well to achieve what? Effectiveness and efficiency of, what they want to achieve at the end of the day. So management also need that in order to, assess the performance of what the business generally. Then back to customers. Customers are also what? External what? User of accounting information. They need accounting information, one, to know the rate of survival, know the rate of survival of the business, of the entity, the rate of survival of the entity. And also, they also need the accounting information to know whether they can consistently, the business can consistently provide them with their goods and services and at the price that, they should, buy so that they can also continue to, work with them. So here, survival rate, dependability, and consistency of the business in operation for quite long is what also customers are also looking out for. Generally, also looking out for loyalty, loyalty of what? The business, whether they can work with them for a longer period of time. How loyal are the business? Based on the accounting information or the financial statement, we can determine the loyalty of what? The business going forward. And you and I come to town when it comes to what? The public, the general public. What are they looking out for? The general public are also looking out for whether the business is doing well, and when it comes to the issue about what? Employment, the general public are also looking out for that. So employment is key. It's one of the things that the general public look out for, whether the business looking at its capacity, how it's expanding, whether they can employ some of its youth so that they can work with them or not. So employment is also another key. The general public is also looking out for whether, based on the financial statement, the business are doing well in terms of what? Compliance. Compliance with what? Regulations. Compliance with what? With regulations. Regulations. Okay. They also need that so that they can assess this compliance in order not to engage in any activity that turns out to hurt the lives of all the people within the community or the country. So these are the things that also the public also looking at. Public, you and I, everyone. So we are the public. All these, users are part of the public, right? And then employees. Employees are also internal users of the accounting information. They need the accounting information. They need this information, in order to assess their job security. Job security. Job security is key when it comes to what? The financial statement and the needs of for the employee. Because if they look at it for the financial statement and realize that, okay, things are not going well, looking at the assets of the business, it's like a debt that is owned, and they actually look out for it and think that no, going forward things might scarce, then they will have to plan and look out for another job for them to continue to survive. So job security is one of the key things that employees look out for when it comes to the accounting world information. So job security. And then survival of the business is also key. Okay. And then one key important thing, even why employees will need accounting information, has to do with what? The ability of the firm to pay them their remuneration, wages and salaries, allowances. All these things are key things that employees look out for when it comes to the accounting information or the financial statement. And these are the things that these users, the 7 users, as per the conceptual framework, look out for in the financial statement when it comes to, accounting information. All right. So we have investors, we have government, we have lenders, creditors or suppliers, we have management, we have customers, we have public, and we have employees. So take note that we have 7 of these users of the accounting information. So once we know their information needs with respect to that, that means that when it comes to the financial statement or the accounting information, there are certain things that tells us that, okay, this is what financial statement, this is what an accounting information. That will lead us for us to discuss what are the qualitative characteristics of what the accounting information. Qualitative characteristics of accounting information. So if I may ask, drop your answer in the comment section. What are the qualitative characteristics of an accounting information? So generally, when it comes to the qualitative characteristics of accounting information, we have 2 forms. So these are the forms of what the qualitative characteristics. So characteristics or features of financial statements. Okay, features. So we have 2 forms. We have one that we call it what? So here, and do this. We have what we call the fundamental qualitative characteristics, and we have what we call the enhancing. So we have the fundamental and we have the enhancing. What is the fundamental qualitative characteristics of the financial statement or the accounting information? When we say something is fundamental, that means it forms the building block, the basis of what thing that we want to talk about. So fundamental means you're talking about what? The building block, the basis, the foundation of what? The financial statement. These are the things that when we see it, we can see that this is what? The foundation of what the financial statement. So another fundamental, we have 2, features or qualities of what? Financial statement. We have one, we have what we call the relevance. You have the relevance, and we have what? The reliability. The reliability. We have the relevance, and we have what? The reliability. When it comes to the enhancing tool, since we are saying that fundamental means it is forming the foundation, the basis of the financial statement or accounting information. When it comes to enhancing, the enhancing is there to support, to improve the fundamental. So enhancing means it's just there to support, to help, and to improve what? The fundamental. So under the enhancing tool, we have 4 categories of the enhancing. So we have what we call the understandability. 2, we have what we call timeliness. 3, we have what we call what? Verifiability. Verifiability. Then 4, we have what we call the comparability. 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 So that is for the enhancing, that's for the fundamental. All right. So under the fundamental, as we said, fundamental, we have what relevance and we have reliability. But under the relevance, we have what we call what materiality. We'll discuss that.